If you are an early stage business, your options may be limited by traditional financial institutions with zero bargaining power due to no credit history, leading to expensive fees and delays. With the focus on scaling a business, additional admin operations such as employee insurance, bookkeeping, corporate secretariat services are often overlooked. On top of that, financial institutions have limited coverage of currencies and destinations. Multiple accounts have to be opened and at a hefty fee. Additionally, SMEs may also lack operational know-how, financial track record, and faces a legacy ecosystem within traditional financial institutions. How then should they go about it? Introducing Pulse, MoneyMatch's super app platform built for businesses. Pulse allows SMEs to access and adapt to the digital economy in a manner that is simply seamless. This platform performs cross-border payments with bank-beating rates to over 80 countries, with transfer fees as low as RM3 only. Foreign transactions now take the same day to arrive, with a dedicated support team assigned to each SME. Getting loan-free financing with Pulse has never been easier. Now SMEs can reduce the risk of late payments, bad debts, and obtain a steady cash flow for business growth. Digitalizing your business with the capabilities of Pulse's holistic suite of financial services is here to help your company run optimally. Well, how then do we do it? Our backend is agile with a multi-API and blockchain model, allowing simple plugins and integration with all our global partners. Global agnostic machine learning results in automated end-to-end flow of data, which allows innovative execution and business sustainability. It is personalized with holistic financial solutions, having our underserved customers in mind. Till this very day, we have helped our customers send 2.5 billion ringgit abroad. Since 2015, MoneyMatch's phenomenal team has helped SMEs save thousands, ensuring costs are at bay, and building a great product that's a bang for their bucks.
Hello, everyone. Welcome to Dialogues at MoneyMatch. Just to give you a little bit of a background, with embedded finance, which includes embedded banking, SMEs and consumers can access the banking services they need and when they need them within the platform and interfaces they use in the day-to-day flow of life and work. But what does it actually mean? Like, if banks don't do nothing, new embedded finance offerings by fintech companies could claim up to 32 billion of SME banking revenue by 2025. And at the same time, embedded finance could expand the overall SME banking market by up to 92 billion. And this is a study done by Accenture. Leading banks and fintech companies are already thinking about how best to position themselves in this emerging sector and which partners can help them deliver innovative solutions at scale. So today, we will find some answers. Is it really a fintech versus digital banking? And the panelists will share their views, and hopefully we can reach a consensus and change it to fintech plus digital bank. So let's go. Before we delve into the details, let's have the panelists give us an insight to your role, your background, and your company's activities in Malaysia. Let's start with Adrian.
Hi guys. Hi. First of all, thank you for participating in our little dialogue session. Thanks, Khairi, for moderating as well. Just a quick background of myself and MoneyMatch and what we do. My name is Adrian, and I'm the co-founder / CEO of MoneyMatch. We've been around. We're a fintech startup that's been around for a couple of years already. I think close to in operation about close to 4 or 5 years. We are primarily focused currently in cross-border payments. And basically, we help companies, SMEs, and retail customers send money abroad, technically. So the reason why we exist in this market, or why we've managed to find sort of like our foothold in the market, is because we technically we've built infrastructure around this whole idea of digitizing the whole process of sending money abroad. And through a lot of investment in the infrastructure has actually given us quite a significant advantage with regards to when it comes to cost, speed, transparency, and consistency when it comes to sending money across overseas. So technically, retail customers and businesses prefer us over the banks because we are able to perform the same sort of functions as the bank with regards to cross-border transfers, and we do it in a more cheaper manner, more transparent manner, and a more efficient manner. So this sort of carved out a very nice niche for us in the market as it is already. And to this point in date, I think we've transacted over more than 3 billion ringgit already of monies moved overseas, right, through our platform. And but the most interesting component to this fact was that in order to use our platform or to participate with our sort of like our infrastructure, you have to currently have a existing bank account. So there's meaning we don't. I mean, it's not fair to say we exclude the cash payments, right? Of course, but I mean, we were hell bent or intent on building a digital platform, and the only way to do this was basically to also only accept money in its digital format. So what this technically means is that what I'm alluding to is that of all the money that's been processed by MoneyMatch, the whole 3 billion or whatnot, every single ringgit actually came to us from a bank account, an existing bank account, right? That if that without the introduction or knowledge of MoneyMatch, they would have basically processed these transactions through their existing bank accounts. I can't remember. I don't have the stats up front, but I think around close to 85%, 80 to 85% of our customer base is basically CIMB and Maybank customers, right? So I think this sort of like gives us, I mean, it sort of cements our thinking earlier on, whereby like whether there was product market fit for the product, whether there was demand for the infrastructure, and I think now that stat clearly tells us that there clearly is, and that a majority actually of existing Maybank and CIMB customers actually prefer to use us over their banks. So it does mean this is testament to the fact that I think fintech companies, if basically organized properly and if they understand the position in the market, they can basically be. It's possible to sort of like compete with the banks and sort of take a little bit off their pie as well and survive in this market as well.
Yeah, well said. Khairi, how about yourself? Can you please tell a little bit about yourself and the activities that your company is doing?
Sure. Thanks, Karen. Thanks, MoneyMatch, for inviting me to this dialogue. My name is Khairi. Currently, I'm the head of digitalization at MIDF Group, and for many years, I was in the investment bank up until the last 4 years when I was involved in the asset management. And for the past year, or slightly more than a year, I've been in the digital scene with MIDF. For MIDF, it's a financial institution started 62 years ago, one of the oldest financial institution in Malaysia. But the focus has been very narrow. All these years been looking at SME financing. Only in the last probably about 15-20 years, the merger with Amanah that created an IB and into asset management as well. So sitting at the group, for me, our job is about to involve in the whole digitalization for the whole group. And on our end, we are looking at ways how to digitalize the services and look at new ways on how to provide services and products to both consumers as well as corporates or enterprises. Thank you.
Thank you so much. Next, we have Professor Nafis.
Hi, Karen. Thank you for having me, and thank you to MoneyMatch. It's a big cycle for me to speak at MoneyMatch Forum because I believe I'm one of the most earliest customer, and whatever the statistics and the feedback Adrian was giving, I do have a Maybank account and I transact with MoneyMatch using Maybank account. I would have not contributed all the billions which Adrian was talking about, but maybe 100,000 plus because I do remit money to my home country, India, and I frequently use MoneyMatch since it was part of the sandboxes. So it's a pleasure to me to join this session and to talk something about MoneyMatch as well as fintech in general. A bit of background about myself: I am not associated to a bank. I am not a founder in that sense, or I'm not a regulator. But basically, I deal with all these entities as part of my academic research. I am a pure corporate finance guy, but I have been working in the fintech space for last 4 or 5 years, and my key aspiration within fintech has always been the fintech regulation. And given that nature, I work very closely with the Cambridge Center of Alternative Finance at Judge at the University of Cambridge, and we work on the global reports related to the alternative finance and the financial market and the fintech ecosystem. In my current role, I'm heading the School of Business at Monash, Malaysia. And I've been attached with the higher education in Malaysia for over 20 years. Previously, I worked with Nottingham. In fact, it's my second inning with Monash. I started my academic journey at Monash 15 years ago, and now I'm back at the same school. I, in fact, have privilege to look into fintech development from education side in Malaysia. I pioneered the undergraduate program at Asia Pacific University in my previous role as the head of school for accounting and finance, and I launched both the undergraduate and the master's program in fintech, one of the first in the country in that sense. And I will be again striving to do the similar aspect at Monash Business School at Monash, Malaysia. I understand this type of dialogue is important because based on my discussion, interaction with the stakeholders, both from the consumer as well as the entities, I think there are a lot of knowledge sharing which needs to be done, and lot of myth or a lot of confusion regarding actually how fintech operates or how digital banks can be different from the traditional incumbent bank is very important. So happy to speak on those areas. Karen, over to you.
Thank you, Professor. Okay, so one of the things that when you speak to startups in the fintech scene is the lack of talent, right? So staying with Professor on this track, what is the sentiment among your students when it comes to joining the fintech industry?
I believe we have to go a little bit of background. First, we need to understand how is the fintech scene in Malaysia. I understand Malaysia has been catching up in terms of fintech growth, but we are not the pioneer in that sense. In fact, if I look at the overall development happening in Malaysia, whether it comes to the establishment of sandboxes, establishment of or having a first unicorn in fintech domain, or even having a initiative towards establishment of digital banking, we have been always following developed part of the world, or maybe following our nearest neighbor Singapore. So when it comes to even to look into the resources, especially from talent side, we have been lacking. I think there is a huge mismatch, Karen, if I say very clearly, that the rapid growth of fintech is not really matched by the available talent. There are two reasons to it. One reason is that in this part of the world, there are traditionally there are two streams of education, I can say. One related to STEM, which is science technology, and one related to the social science, including businesses. And people who are into the business domain, doing accounting, finance, or management, marketing, and so on, will not be really inclined towards technical expertise. And if you talk about fintech, which is a combination of financial technology, having an expertise in the financial aspect, which include wealth management, investment, banking, and so on, and technology, which looks at the application side of technology like artificial intelligence, machine learning, and so on. So definitely we do not get that group of students who are having the background of both domain. And university or higher education sector need to play a very important role in order to make sure that the skill matching is there for the fintech ecosystem. Initially, if I go back and look at my early days at APU was the first university to start a fintech undergraduate program. And when I joined in 2019, the fintech program was having only 5 students. And when I left APU last November, we had every intake, we had over 50 students just taking on fintech specialism. This is, you can just see the increase in uptake in having the fintech knowledge. And now if I see in the last couple of years, many of the local as well as international university, including the likes of Sunways, Taylor's, UCSI, all are slowly embarking on some level of fintech program in that. So I think currently what we see that there is a talent shortage within the fintech ecosystem, not only from the fresh graduate, but also from the existing workforce, because the people who have joined the financial services industries in the last 10 to 20 years, they have not gone through the training on the fintech. There is a lot of effort coming up, whether it's from the MDEC in capacity building, or whether it's from Fintech Association of Malaysia, or even people like us who want to educate with different forums or different webinars and seminars. But I still believe that the existing workforce also need a lot of training, which maybe the Association of Banks, I think AIBM, the Association of Banks in Malaysia, should be taking on this type of aspect. But overall, if I look into the existing workforce, I think there is more demand than supply, and it is going to further increase with what's going to happen with the digital banking licenses coming up. And if we are not able to provide or have a sufficient skills available in the market to cater for the fintech industry, we are not going to see that development. Also, just to be on the similar side of attracting talent, I believe Malaysia also need to be very much open in that regard. If I compare to again with Singapore, or compare to London, for example, or UK in that case, they have very much talent retention scheme. They are trying to attract from talent in fintech from all over the world. So in order to build that capacity, platforms or aspirants of digital banking like MoneyMatch, for example, they also need to look beyond Malaysia, for example. But again, I'm not discounting that. In the next couple of years, Karen, I think there will be a good bunch of talent available who will be right match for the fintech industry. But currently, yes, we do not have enough pool of talent, and those talent which can be useful for the fintech industry need to be well trained in that sense again.
Yeah, I think based on what you mentioned earlier about the digital bank, right? One of the things that they promise in their business plan is to create jobs, and I'm sure each of them kind of suggested to create 100 jobs in one digital bank. And if you're looking at 5, there will be like a demand for 500 talent immediately in the market. So I think Khairi can help me answer this question. Like, should we teach a banker to code?
Maybe we should, Karen. I can tell you this is real problem that we are having now. That we look for Java lead. We look for developers. Very few actually send their applications in. Not because there's not many. There's a lot out there, but because in MIDF, of course, we want people to be really working here, based in Malaysia, right? So that is a bit of a problem, and we just couldn't find the right talents. But yeah, the demand is so different, right? I mean, I was in the investment bank for 15 years. We never really look for programmers, for Java lead or anything. People doing the apps, UI UX experts and things like that. But then now in MIDF, right, we are hiring this kind of people, which is the first. So when we started about a year ago trying to build our first app and our digital platform, it was we took an easy path, which is working with a vendor. But even our vendor, which is registered in Malaysia, they are a company in Malaysia. Most of their programmers are based in India. And when we build our platform stack of technologies, using, because eKYC we're using different people, payment gateway we're using different solutions, right? So when we stack all the technologies, when we were doing our work, we were working with people from, people from Malaysia, people from Singapore, Indonesia, Australia, India, Denmark. Well, our advisor is based all the way in California, US. Okay, and now one of our colleagues is based in India. So there is really lack of talent, and if any bankers would like to learn coding and change their career path, I can tell you, that there's a huge demand, and it's just us. MIDF, we just started a small player, but I'm pretty sure others also are feeling it. The fact that they just couldn't find the right talent out there.
Yeah, I was so worried like you might just say the word COBOL programmer, then you're okay. So
Karen, I just want to add on one aspect of what we were discussing just now. I think if you have to also look at the traditional banking industry. Banking and technology has been always two different operations within the financial institution. Technology was never being part of the banking activity in terms of bankers. We have always been the technology side has been either outsourced, or there will be a group of people, a pool of people who will look or work behind the scenes to provide the technical expertise. So that has come with the notion of the financial institution. Finance experts are purely experts in financial services, whether it's investment, wealth management, and banking related services, and they should not know or they should not do technology. But with the fintech now, it's something like you need to have the technical expertise in order to involve in the fintech operation, because if you do not have that expertise of technology related to the financial services, you will be an outlier in the industry. So we also have to see that notion need to change. Now bankers need to be a tech guy, and tech guy need to have banking knowledge as well. It's like a mutual interaction between the two, which always will be the focus if you want to achieve that good mix of banking with the technology knowledge.
Yeah, that's so true. You're either an outlier or an outcast, right? You pick. So picking on what Adrian said just now about how 100% of their businesses are digital, right? So the question is for Khairi, what do you think is the percentage of digital engagement at MIDF has with customer post-COVID? Because I'm not sure if we can say that we are post-COVID. I mean, but looking at the current economic activities out there, you see, I mean, traffic jam is back, right? That is a good economic indicator. Do you see an increase in face-to-face interactions? Like, will fintech and cashless and digital continue to stay on?
Yeah, definitely it's going to stay on. In fact, it's going to just grow bigger and bigger, right? But at the same time, people do need that face-to-face interaction, right? They especially at a much higher level, maybe for example at a consumer level, or maybe for just a normal transaction, you don't need to go to the banks anymore, right? You can do all those transactions online. But for example, on the MIDF side, when it comes to the SMEs, or when it comes to the corporates, or the investment bank side, when you're talking about corporates, you're talking about IPOs and all those things. I believe as you say, it's not really post-COVID, right? We're still in the transition period, but I would say, from last year, I think that there's more face-to-face interaction. Having said that, when it comes to our product, what we have been doing on our digital side at MIDF, for us, our interaction with our clients or our customers are still 100% online. Our onboarding is 100% online. Our post onboarding, everything is online. When it comes to customer interaction, at least on our end, with our consumer side, is still almost like 100% online. We don't even have any physical interactions. But as I say, it's different when it comes to big deals. You're talking about millions of dollars or 100 millions of ringgits. Then I guess those kind of deals, you still have to have the face-to-face.
Okay, so following on from what Khairi said, Adrian, how do you feel about being a digital-only fintech company and making sure that you reach the non-digital customers?
Yeah. How do I feel about it? I think it's hard to quantify. I feel obviously we felt handicapped at first, right? It was pretty difficult to play this role, in a sense whereby, like, you see, I think that in an environment such as like Malaysia, where we always like, or most of the startups actually, they like to have this sort of utopian view whereby, like, oh, all my customers online, I just do digital marketing on Facebook and the customers will come, right? But likelihood is almost never the case, right? As a matter of fact, if you onboard your customers digitally, you will soon realize that you're actually competing for the same set of customers with almost everybody else, right? So this bunch of customers are sort of like the high value customers, so to speak, and they're very savvy, they're very price conscious, they're very aware of the latest new thing, and they will ditch you as soon, and they're always trying to chase the new thing. You start to realize that, wow, this customer is it's very expensive to acquire and even more expensive to keep, right? So we sort of realized this early on, and we sort of built our strategy around. We chose a different path, so to speak. We went down the path whereby we were going to be a lot of customers or SMEs, let's talk about SMEs in this instance, which is our main customer base. We wanted to be the SME's main or primary interaction with digital finance. So most of our customers, whilst we obviously enjoy a fair share of the digital customer as well, but a lot of our customers are basically guys that so you can call them sort of maybe lower tier banking customers. But let's talk about them as the customers that the banks don't care about, right? Meaning the banks are not don't spend marketing dollars to acquire these customers, or they don't spend marketing dollars to keep these customers as well. These are the customers that open a bank account because let's say bank X is near their office, so they just walk down and then like, this is bank. It could be RHB, it could be Maybank, it could be M Bank. I'm indifferent. A bank is a bank. Then they walk there and they open their bank account and they go about doing their business, and the bank performs the transactions for them. And then these guys, when they need to make an FX transaction, they just walk to the branch. Hey, I need to send money to my supplier XYZ in America. What's the rate? Okay, how much ringgit is it? Here, take the ringgit from my account, send the money overseas. So they're almost indifferent to the rate they get, the service they get, because they feel that they are so small that they are beholden to the bank. So this is where we sort of come in. We love these kind of customers technically. So we go and approach these kind of customers. We tell them, we basically show them the light, so to speak, right? Where you don't have to go to the branch anymore. There's much better rates compared to your bank. And the onboarding process with MoneyMatch is a lot more easier than onboarding a new bank account. So, you basically get to enjoy all the benefits and qualities of a top tier banking customer, but with sort of like, without having to have the sheer size of a top tier customer. So I would say that we really enjoy the process and we sort of appreciate the process, because these are the customers that I think that that appreciate our service a lot more, because we are basically their first interaction to digital finance. There's a stickiness to them as well. They're familiar with us, they trust us, and they're really comfortable sending money through us. And they also refer their friends to us once they see the benefits of using us. So yeah, I mean, well, like I said, it's pretty hard at first, but I think right now we sort of like made it our journey to sort of be, to try to digitize finance for SME customers in Malaysia, right? One SME at a time and one product at a time.
Okay, brilliant. Khairi, what do you think? Fintech companies are so agile, right? But do you think that do you think fintech companies are operating on a different set of rules, right? And if it means better, faster, and cheaper for the customer?
Well, to put it that they are on a different rules. I mean, from the regulators' perspective, regulators is actually trying to cope with the fintechs actually. Okay, coming out with new frameworks, a sandbox before that, and then basically creating a new playground, which is I think Malaysians like that is properly regulated, right? I think on SE side or even on Bank Negara side. From the early days when they look into say equity crowdfunding, the P2Ps, right? And then they allow the crypto to grow as well. Of course, we were a bit slow, but that's fine. Sometimes being slow is not a bad idea. We take cautious steps, right? Even I think on the digital banks also, the license is coming up again. We might not as fast as other countries, but that's fine. We know some of the journeys do take some time. So to back to your question, whether they are on a different set of rules, yes and no, to put it that way. But if it helps to make things faster, right? If it helps to make it more efficient, and if it's I think it's the right thing to do, right? I mean, fintechs are very agile, very quick turnaround, faster decision making, right? I mean, I've been, I have to say again, I've been in the banking for like 15, 20 years. We know how slow decision is. And then sometimes, you have a very good idea, but you're just a small executive or just an associate. How do you, take that very good idea of yours all the way up, all the way to the CEOs, right? You can't. But in a small fintech, a young, brilliant guy who just graduated can easily access to his boss or the founder and create the environment where from ideation to come up with something, whether it's product or it's just a simple process, it helps. But in banks or the incumbents, right, there are layers and layers of of levels and sometimes along the way things just got lost, right? To put it that way. So I mean, I'm happy that I've been on both sides. Of course, very young at the digital side, but I've experienced it all. Whether it's the biggest global bank, the likes of Citibank and JP Morgan, or some that the biggest in Malaysia, the likes of Maybank. But you've seen it all. It's the same that as I mentioned again, that the the number of layers it just slow things down. But with fintechs, it's not that they really have different set of rules, but as I say, the regulators allowing them to give them the right playground to do so, which I think is a good thing. It's regulated and they can do it faster, and we're seeing it happening. If it's not MoneyMatch, take another look at, for example, the most recent one in the last 2 years, robo advisor. I mean, I kind of promoting them a bit here, I guess, the likes of Wahid and Stashaway, but I'm telling you, people are just love this product, right? I mean, nobody wants, I mean, not to say nobody, but there are lots of people out there, they don't want to see people, they just want to do everything online. You can do it, register in 10 minutes rather than filling up, I don't know, 10, 20 pages of forms and, keep signing one page after another. And then photostat, I don't remember when was the last time I photostat stuff, but, there were times when we want to submit any forms, we have to photostat all kinds of things and then submit together with the forms, right? So, but yeah, what I would say is that fintechs, they may in a slightly different set of rules, but I think it's helping and it make things easier for everyone.
If you can share with the audience, right? Are you working with any fintech companies now?
Yeah. We have to. I mean, at the B2B level, of course, there's a lot. As I say, we stack our technologies, right, to build our digital platform. In fact, our partner for our MIDF Invest is actually Saxo Bank, one of the pioneer as a fintech back in the 90s when, I don't think they even heard the word of fintech back in the 90s, right? But they were one of the first to do into online broking and then build the business, basically to offer their services to other banks. So then that's one, but there's a lot of other players out there. I would say the fintechs that we are working with, whether openly or behind the scene. And of course, not just the B2Bs is definitely there, right? The fintech, for example, our eKYC, our payment gateways, all these companies that we're working with, that we're building our own platforms. These are all fintechs, but that's B2B. But then even B2C, the way we look at this, I mean, back then it's always about, bank A versus bank B, bank C compete with bank D and those kind of things, right? But now from the digital space, we talk about collaborations, right? I mean, Adrian, I think this, it's more about collaboration. It's more about, this fintech has something that we do not have, and then there's another fintech also has something that we do not have, and then it's about how can we build that ecosystem, right? With different group of fintechs and benefits everyone.
Okay, that's really great to hear, because I also feel like collaboration and partnership is the best way to go. So now we look at picking on the professor's brain from the academic point of view, right? So you have grouses from the bank saying that the fintech companies are too cowboy, and then fintech companies are saying that regulators are too tight, is restricting my innovation and all that. What is the point of view from the academic side? What do you think should be the way?
I think I'm going to play a neutral part here, Karen, and I think I'm not, as I mentioned earlier, I'm not supporting bankers, or I'm not supporting startups, or as well as the regulator. But you need to understand one thing: no one likes regulation, whether it's established banks or whether it is upcoming fintech platform. But you also need to think why regulation is important, and that's why I think you're asking the right person or the neutral person. We need to understand the journey of the regulation, why regulation is needed. For example, when we talk about any institution in a financial system, it can be sometimes it can be too small and people don't care about it. So we have a lot of startups which are very young, small, very limited activities, one or two products, dealing with very few customers. And regulators will be easy on them because they are not being part of the bigger system. Then these too small to care becomes too large to ignore. And when we say too large to ignore means we are talking about the digital banks or the unicorns which are started dealing with a bigger group of customers, dealing with a bigger amount of money. And then finally comes the last stage, which is too easy to leave it, or it can become too big to fail. So when the problem happens, the regulators only comes to play in the second and third stage, when it is too large to ignore or it becomes too important towards the financial stability. And it is important because when you are talking from the regulators are not looking at one side of the story. Regulators are the only institution or the regulatory bodies. They are looking at the both sides, both from the customer perspective and both from the institution perspective. From customer perspective, their role is to make sure that all the people who are dealing with the financial institutions within an economy should be well guarded, will be well protected. And if you are dealing with the hard-earned money of the consumer, they need to be having some level of protection. And we have already seen what happening to those unregulated exchange dealing with the crypto. By the way, I'm a very strong critic of crypto, and I don't invest. I don't advise people to do that. And we can see that there are a lot of scams happening, or even the exchanges are running away with the people investment, and nobody is there to protect. You lose. You can become a millionaire overnight, but you can also lose your money next day, and nobody will be there to protect you. Now come to the next level of the platforms or the institution which are going to be regulated. Now, when we are talking from the institution perspective, when you are regulated, you also enjoy the confidence coming out of the customer. You are dealing, and your customer base is going to increase. For example, if digital bank becomes the similar aspiration of deposit insurance scheme, there will be more and more customer will be more inclined to work with digital bank rather than having digital bank without any deposit insurance scheme. So it's the role of the regulator. We should not be looked from. Regulation is not to stifle innovation. Innovation should be there, but innovation should not lead to people abusing or the institution abusing the customer. And we have seen all those challenges. Talking about regulation, we're not only talking about the financial regulation, but also talking about tech regulation. When we talk about fintech, especially we're talking about the big data here, the customer data, and how many fintech institution really take care of the need of the, for example, of the data privacy or safeguarding. In fact, in order for me to teach and preach fintech, I interact with lot of fintech platforms. And usually I do not find comfortable sharing my credit card details or my card details, because I still do not believe that they have reached that level of technological expertise to safeguard my data. So even I get Touch and Go will give you 100 ringgit, or Boost will give you 50 ringgit and share or tie up your card with them. You cannot have that confidence in doing that, because the security layer is not well guarded, for example, and I'm also not well protected if anything goes wrong in that. So regulators are not the bad guys, and as an academic I can say that when I discuss with regulators, I understand where they are coming from. So if the end result is to safeguard both customer as well as the institution, and we are trying to bring to a certain level of financial stability, because if they become too big to fail, we can see a domino effect, and the fintech can be a next wave. Talking about what Khairi was mentioning about some of the platform becoming very popular. For example, I am again a critic of BNPL, for example, buy now, pay later, because this is again adding up a debt pressure in the economy, and there will be a lot of people who will be taking on these small. You add up in the big denomination or a big group of people using BNPL, and if they start failing their paying their installment on time, imagine how much debt pressure can be in the overall financial system. So at certain level, when the things started to become too big and the money attached to that particular initiative or activity, the regulator has to come important, and I think most of the regulators are waking up to that, and 2022 will be the year of regulation for fintech globally, I believe.
Okay, great. Just a side note to the audience, you still need to support fintech companies pushing out new products. Yes, with security in mind, and then don't put all your eggs in one basket, like all they say, right? So, Adrian, let's look at the current fintech market as a whole, right? So much has changed and many exciting development. What do you think is the most exciting change over the year? And is there a new product coming out from MoneyMatch?
Well, I think we always we always aspire to launch new products through our new verticals as well. But I think we'll keep it mum for official announcements. Yeah, but I think so. Let's say with regards to, sorry, your question was, is there anything new in the fintech industry for the new year, right?
Yes.
The coming year.
Yes.
I think domestically, we're all definitely excited for the introduction of the new digital banks that will be awarded their licenses by Bank Negara Malaysia in the coming year, this year. I think that's going to be a game changer for sure, because whilst I think that like some of them were rightfully having this conversation earlier on that the fintech companies, the fintech players, we want to work with the banks, right? The banks have established a lot of infrastructure and good pipelines, right? With regards to, they're really plugged into the financial system and the financial infrastructure, and a lot of fintech players rely on this connectivity to sort of process transactions for us, right? But I think, as alluded to earlier in this dialogue as well, that a lot of them are on COBOL, right? So the technology that the existing banks run on is quite arcade. And whilst it works, it's consistent. I think it is reliable, and they've been doing it for years. There's no reason to change otherwise. But the problem is that a lot of new fintech players are coming in, and we are building our technologies on more newer frameworks, newer languages, right? Like, for example, like Laravel and whatnot, right? PHP and whatnot. So these things have difficulties interacting with COBOL, right? Or any other new application. Or like, for example, like the sort of like the data infrastructure that we build in MoneyMatch, where we sort of like try to optimize the way we use data here, and to create more efficiencies within our organization. These things might not plug in very well to an existing bank infrastructure. So it actually it creates a bit of a problem, whereby it's like you have like a Ferrari, but you have a very old driver, right, so to speak, right? They're not maximizing the full potential of the Ferrari. So I think that digital banks are coming in with newer infrastructure, with basically newer banking infrastructures, that newer platforms, so to speak, that they'll be using as opposed to the older COBOL technologies, will be pretty exciting for us to plug into as well. So you're going to see a lot more fintech players plug into the new digital banks for sure, because I think that the new platforms that they will build on, and the new core banking platforms that they'll be using would probably not be built on COBOL, I would assume, right? It'll be something more newer and more sort of like API friendly as well. And we'll basically see a lot more integration, and then we'll start to see a lot more growth. Also a lot more exciting fintech offerings and fintech products being launched on the back of our banking infrastructure going forward in the next year. Yeah, so that's what I think will happen.
Great. Okay, Khairi, I think what we have touched upon earlier, we talk about talent, we talk about the regulation side, we talk about how competitive fintech and how collaborative they can be to the banks, right? So what do you think in terms of the customer side? What do you think is the biggest market that is really underserved, right? Is it the gig economy, the migrants, or even the elderly age group? And then who is best to serve this group of customers, banks or fintechs?
Sorry, just to define, when you say migrants, we are referring to foreign workers, right?
Foreign workers and expats, yes.
Okay. Of course, expats numbers are not that big, right? But if you put in the foreign workers, whether they are with a work permit or those without the work permit, I think that is a huge market, or underserved market in Malaysia. If you just take Malaysian population, as in people with the Malaysian IC, I think our country is quite advanced in terms of number of people who are bank as compared to those who are underbanked. I mean, this is compared to other countries, right? Of course, there are still a group of them, but we have the likes of our Post Malaysia and BSN and handling that, and of course to handle that. But in terms of the underserved, in terms of it, I would say still the foreign workers is in millions, by the way, and these are the people with the money, just to tie up with MoneyMatch, when it comes to remittance and all. I know, they're more on the SMEs and the corporate side, but I'm just saying that there's a huge track of money there. That they could have been tapped, but then I guess in terms of the regulation wise, that is something that needs to work on a bit, right? In terms of getting the accounts open or getting them to be served properly while working here in Malaysia, because I believe a lot of them, they are really unbanked, or they don't have any proper accounts in Malaysia, and they've been trying to use so many other ways to remit their money. But not the gig economy, because the gig economy, I believe in general, whenever I deal with any one of them, they are all properly banked, whatever bank that they're using, the services are there. But definitely fintech will have that special place to provide special services and a very niche, right? Whereas for the gig economy, whether it's for the foreign workers, right, or some other groups that is how you call it, the underserved. But I would say in the biggest chunk, in terms of the millions of them, it could be the foreign workers. But I'm not sure how we're going to tackle this, because as far as I'm concerned, they are not allowed to open a proper bank account in Malaysia, right? Until today, if I'm not mistaken, on the Bank Negara rules. So I mean, correct me if I'm wrong on this, but as far as I'm concerned, that's a bit of issue there.
Yeah, it is still a challenge. Yeah. Okay. So I would want to give each of you a few minutes to a closing remark, but more importantly is, what are the key takeaways that you want your audience to get from this session? Let's start with Adrian.
Okay. I think the key takeaway that we'd like to impress upon to the audience would be that, judging from the conversations that we've been having with the panelists as well and listening with intent, I think that it's pretty clear that there will be two pillars that will be emerging from this whole situation. Will be basically the conventional financial system and the new digital players such as us per se. But I don't think that, well, obviously there'll be some cannibalization, right? Because prior to this, financial services were being offered to everybody else. It was just being consumed in a traditional way. But I think that it's almost very clear. I mean, if you look back to the way you consume everything else in your life, I mean, your social medias, the way you watch TV, Netflix, you don't really watch Astro anymore as well, and stuff like that going forward, So it's pretty clear that there's going to be a shift. It might not happen as fast as what we thought. I initially thought that the shift would happen way sooner than what I envisioned, right? It's taken quite a while. But I think we can see the trend moving, and I definitely feel that going forward, in order for us to, instead of fighting the trend, in order for us to embrace the new reality quicker, the banks and fintech companies should basically come together and collaborate, accept the reality, and then let's start building something better for the future. So because I think products and let's say people or consumers of the future will demand a new service, right? A new iteration of financial services. I mean, you cannot expect them to to live in the future but do banking in the past. It just doesn't make any sense, right? So I think that's roughly what I want to impress upon the audience, and I think the sooner we embrace it, the quicker we can build better products, build a better infrastructure, and get the best out of this new reality that we're getting ourselves into.
Yeah, well, very well said, right? Like, stop dating, get married now. Okay. Khairi, what do you think?
Thanks, Karen. Yeah, well said, Edwin. To echo some of it, I mean, and to look at what we're talking today, fintech versus digital bank, whether they can coexist. Definitely they can. I mean, digital banks not even existed yet. Actually, in a way, in Malaysia, what we have is actually the incumbents. To talk about the incumbents, I believe in the next 5 to 10 years, we will see less of those names. Some of them will either merge, or I don't know. I don't know how they're going to merge because they're just too big. And actually now, we just have too many branches and not many people. Actually, if you've visited some of these banks, right, even on a certain, usually it should be a peak hours, but the banking halls are empty. Of course, the pandemic also has accelerated how people do things, more online, and you can interact like what we're doing now, right? So the incumbents, from there, they have to change their business model. The fintechs is just gonna eat up their market share, or because you see the fintechs, as I mentioned earlier, they're more agile, right? And they're more hungry, and they're more focused, and it's very easy for them to pivot, or to maneuver around and get things done faster. So while banks just too big to see some of the opportunities there, the fintechs, there's plenty of them. They can look at all these small opportunities or even big opportunities and focus on that, and going to do really, really well, whereas the banks are just continue to I guess less efficient, and unable to compete. So for me, digital bank, definitely they can coexist with the fintechs, but on the bigger picture is the incumbents, the big banks. They are actually, I would say, in trouble. Not all of them though, but yeah. I'll end it there. Thanks.
Thank you so much,
Yeah,
Khairi.
I think.
So-
Sorry, just wanted to add to what Khairi said earlier as well, right? Just to add to it, like he basically hammered the point home, right? In the sense that, like, we look at the new large players coming up in the economy. Let's just take Netflix or Disney Plus or even Airbnb, for example, right? The way they do business, they require very advanced forms of collection and disbursement infrastructure. Meaning they need to collect money locally and disperse money to the renters and buyers at a large scale very quickly, right? And the incumbent banks might just not be set up to sort of fulfill this demand right now. Just an example to echo in what Khairi was saying as well.
Yes, good point. So I think the last but not least panelist, the truth is, right, whether or not the industry is going to flourish depends on this guy. He needs to produce the talent. Professor, what do you think?
Karen, I will talk on two things as my closing remark. One thing which is on the ecosystem which we are discussing as part of this dialogue, fintech, digital banking. I always preach, and I always pass or echo this sentiment to the fintech startup, whether it is a pure platform or they are going to be part of the digital banking system. They should not forget that the whole aspiration of fintech was to increase the financial inclusion, and it should be always the main motive. And I always see a similarity between fintech and when Islamic finance was launched. I'm also an expert in Islamic finance, and one of the reasons why Islamic finance picked up in the early days, or in Malaysia as well, was because it was supposed to provide an alternative finance and as well as interest-free banking and services to the community or to the customer who were lacking that type of financing services. After some time, they started to follow very much similar trend or activities of that conventional bank using Islamic banking models, and they started diverting from the original ambition or aim. Echoing the same sentiment, I hope that fintech, in any form, whatever they are operating, they try to maintain the ethos of operating as a fintech platform, and they try to bridge that gap and increase the financial inclusion to bring into the marginalized community or the unbanked community into the purview of the financial services. That's one of my closing remarks. In terms of the talent, I also believe that it is good for the survival of fintech themselves to work closely with the educational institution, because at the moment Malaysia is not a home for producing good talent for fintech industry. And if the fintech industry is flourishing, apart from working with the investors as well as regulators, platform and the incumbents who are going to take up the digital banking license should work closely with the educational institution, higher education, to see that what are their expectations, what are their demands, and how they should work closely, whether it is a short-term training, whether it is a short-term certification, or whether it's a full-fledged banking and financial specialism within the fintech domain. Because if we are not able to produce right talent, we will never be able to flourish this industry. And that goes back to the good collaboration between the platform or the digital bank and financial institution to work closely with the higher education to produce the right talent for the industry. So I'm all go for that, provided people like Adrian and Khairi are happy to work with the educational institution, and Karen, as you as the association head, are bridging that gap between the educational institution and the platform.
I think we have to, if I can add to it, because I'm really feeling it, in terms of getting the right talent into the fintech, or I mean, I don't know, we're not really a fintech, but we work like a startup, and within a big organization, we need the talents.
Actually, to add on this note, right, the feedback that I receive on association level with conversations that I have with the other associations, the issue is that the pinching of talents within the fintech company, it has gone to a scale where the talent become too expensive, and it has reached a level where it's no longer, it doesn't make sense anymore to pay so much for someone with not that many years of experience. So I think the talent bubble in our neighboring country is going to burst soon, and then you will see a new breed of talent coming into the market, right? So I think, ladies and gentlemen, we have reached a consensus that we need to change the title of today's dialogue. It's no longer fintech versus digital banking, but fintech plus digital banking. So thank you again to MoneyMatch for organizing this dialogue. And thank you everyone for your time.
Thank you, Karen. And thank you, MoneyMatch.
Thank you, guys. Thank you, guys.
Thank you, Karen.
Take care, guys. Bye.